Hello and welcome everybody to the weekly recap, aka Easy's private lesson today. We are going to dive into the crypto market first, simply because BTC starts to break structure. I mean, it's not the strongest close below, but this is still, in my view, is still the key low, because the scam wick, if we wait for the scam wick, we obviously wait for a very long time. And I still consider this the range low, and we started to close the first daily candle below it. And so I managed my risk. I sold 70% of my altcoin holdings, simply because I want to manage risk. It's late in the cycle. I don't want to be back holding underwater, thinking like, oh yeah, maybe it goes up again or something like that. Not like the usual crypto participant is acting. And so even though it's not fun, and even though the engagement is pretty low on saying something like that, it's always pretty interesting if you say you buy something, everybody's like, yeah, we'll buy something. And if you say, oh, you sell something, because the idea might not play out, the engagement is pretty much very low. But regardless of that, I think a bounce from here could be very likely. I just don't want to bet on it, just because this could also just grind lower and does not provide any significant bounce anymore. But we have big FVGs up here on almost all charts. We have untaken liquidity. So I wouldn't be surprised to see at least a bounce into this here. And then it will probably feel like a mistake to sell, and everybody or people start buying back in or something like that. But with this close below here, this was already the first sign of weakness. We also have a full 12-hour body below. And the more closes we have below, the more this picture is getting confirmed. And so I manage my risk. I live from trading. And so I'm careful with my funds. For me, this is like the money I buy. I pay my rent, I buy my food. And so in the end, I don't want to round trip more than necessary. I don't want to pay anything back, and I want to definitely not being trapped in a long underwater. And I would recommend you do the same, manage your risk properly and stay alert, because this could easily be the higher time frame macro top. And so, yeah, I'm looking to add to my short here. This one is doing pretty well. I did a 20% TP. And now if you get a bounce into this area, I will probably short this on wide invalidation, just because I treat this as a swing short. Because context-wise, as I said many times before, this is definitely higher time frame premium, and in higher time frame premium, I look to sell as much as I can, same as I'm going to buy, and as I did buy as much as I can in higher time frame discount. And I can sell spot like more than I have, and this is why I short. But I see building swing shorts up here is more or less like buying BTC for around 20k 3 years ago, and this is exactly what I do. I sell BTC at higher time frame premium, and I'm willing to pay stop losses for that. If this doesn't work, that's totally fine. This is why I have risk management and have my invalidations in place. ETH, similar picture, only that we broke structure already before. We came back to this demand. As said, I wouldn't be surprised to see a bounce here. I rotated my spot holdings into a purple position. I sold I got stopped at break even on this one. I sold 80% on the way up already. And so I really don't care. Should we get back to this little demand as supply here, which, as said, a bounce from here makes sense. I'm also looking to get into a short. I also sold like 70%, 75 more or less of my Doge holdings here. I mean, I opened them around 15 cents. I TP'd, I added back, I TP'd, I added back. So I made good money with this. It didn't play out like I expected. Sure, we could also bounce into this. We could also go for this here, right? It's like I'm not saying I know what's going to happen next, but I'm just saying I manage my risk. And should we get a bounce, should we like start forming higher highs again, I can still decide to add back. But for now, local structure is broken. BTC broke its local structure, and everybody is following BTC anyway. We could have some outperformance here and while BTC is doing nothing or something, but this is not what I want to bet on. Yeah, as said, I made good money with Doge, didn't play out like I expected, but this is okay. That's totally fine. So much to crypto. Let's dive into TradFi. The SPX is chopping around below its all-time high. We broke structure to the downside, as I said before. It's also not like the most convincing close yet, but it also was a weekly close below those lows. So that's the first time since a very long time that we really broke structure to the downside. We also lost the trend, the momentum. And so I'm scaling into a big short here simply because I have still a lot of stock longs open and I want to hedge them. And so far it did me well. Every time my stocks went down, this position went up more or less. And this is obviously the reason why people hedge. And you see high volume is here, and usually we get high volume on inflection points on the SPX. Usually into the lows, we get more volume than into the highs, but usually more volume means there is a shift going on. And obviously we could also just like take this high, consolidate a little bit like we did here, like we usually always do, but like breakdown, little consolidation, another sweep of those highs, and then the sell-off, and then I will just try another short. Yeah, no reason to be perfect. This is why I use risk management. But I also see a reason where we don't do that anymore, where we just like consolidate a little bit and then we break down. So I want to be hedged, and I want to have, I want to have counter exposure to all of my remaining longs. I did 2 TPs on gold this week, which adds up to 65% of my holdings, short and long-term positions. One was up here, one was here, so an average was somewhere here. TP 65%. More and more news about gold, more and more shilling about gold, and obviously this isn't a very sustainable move. So bigger retracement could be on the table, and yeah, then I can always decide to add back if necessary. But I think, yeah, this is looking like the last stages before a bigger correction. And usually gold, it's very interesting because gold is the biggest volume asset, the biggest market cap asset, and it tops very quick, right? It has this parabolic blow off top, and then it like nukes almost immediately. And so rather taking profits on the way up and on the way down, because things could develop fast. To all of my stock positions, just a little overview. Yeah, for now, many of those haven't really broken structure, but at the same time, many are already did already quite well and are at a higher time from supply and premium. And so I don't see a reason to be overly bullish on them, especially looking at the SPX. But at the same time, I also expect a little bounce from here, and so I could probably get out of those early next week, because obviously they corrected quite significantly here, and usually after such a correction a bounce is likely. But many of those are still holding structure quite well compared to most crypto stuff. This is back at my entry. It all depends here how we gonna proceed. Should we start making lower lows? Then I consider this a top, and then we will probably go way lower. And this is basically the same story on all of them. We all sit on all of them. We sit at this trend line. Now the question is, do we make a low, or do we like just keep on going? I shared this one earlier this week. It's doing quite well. The entry was a little bit high, but nevertheless, here also a range trade to make it profitable, to remove the risk, and then we will see if this trend can continue. But I think the steam is pretty much gone. Looking at the SPX, and many of those positions are either close to invalidation or already invalidated. For example, I did a big TP on, I think it was Illumina. I'm not quite sure. Or was it like, let me check. It was Nutella, yeah. On Nutella today. a bigger TP because this just looks a little bit toppy, even though we haven't really lost structure. I need to be fair about that, but at the same time, it has done a very great job so far, and so I don't see a reason to round trip more of those gains. And I'm looking to build cash based on the SPX idea, and so I'm selling a bit more than less. And should it go higher, that's great. And should it go down, that's also great because I took a big TP. Same story as usual. Lloyd did extremely well earlier this week, but it corrected quite aggressive. It came back to this trend line. Question now, again, on almost all tickers, it's the same question. Can we hold this now, or should we break this down next week? Then I can TP the rest of my position, more or less. And should we just continue this trend, I push this trade as far as I can, because this is what I do as a swing trader. I'm trying to milk those plays as long as I can. And you see, it's basically the same story on many of them. And this is how I like my plays, right? This one is, by the way, lost its structure, but it's not that volatile. So the whole move is very easy to calculate. And this is how I treat all my swing positions, right? Because those opportunities don't come around every week or every day. And so I try to push them as far as I can. And this still doesn't require much time. I just look at those trend lines at local structure. Should, for example, this trend line break and this structure break here, it's very simple that we go at least to this here. And it could also mean that this is the higher time from top and a real break of a real change of structure. And so I TP a bit more. And here, same story. We broke this down sloping trend. I added a little bit. And now the question is, can we hold the local structure within here? Can we hold this trend line? And if we can't, I probably reduce size on this one. And the more volatile the stock obviously is, which like this, like the plug one here, I did more TPs simply because I know if it's volatile to the upside, it's also volatile to the downside. And you see from this point, it just nuked 30% within 3-4 days. And yeah, so the more aggressive the stock is moving, the more aggressive the TP should be. This one is doing extremely well. It seems like this one doesn't really know the SPX looks like it's topping. And so again, I push this trade as far as I can. Local structure would be here, so my stop loss is basically here, and let's see if we can go to the next supply. It's still in discount, so who knows what's up for this one. And those are all not active. I just watch them from time to time. Yeah, we forgot crypto majors. Let me cover that really quick, because I was telling last week already that we broke local structure here, so we made a higher high internally. Now the question is, do we make another higher high here? We did one here internally again. So, I mean, we could just fill the wick, but very important is this high. Should we break this, more and more signs shape up that the trend is changing. Same story here on USDC. We have a local internal higher high. We have also an external more or less higher high. So we are above this whole range here. And so range highs is more likely. And then the question, of course, is what happens to USDC if USDC goes bust, or if more and more elite politicians are going to promote USDC more than USDT, because USDC seems to be more connected with the whole elite and the whole system. I think it's gonna be getting a bigger share of the whole pie in the long run. And so also here, BTCD still grinding up, still making higher highs locally. And while we could just nuke one more time down or something, this is a change of character, a change of trend locally. And the question is, where will this lead us? We've also taken those levels already. Yeah, so more and more signs showing up that the whole market is turning bearish. The question on those is, will they have one last push? Should we break this? We're still in the level, but we make local low lows, but should we break this? Another push to those highs could be on the table. And if I look at sentiment, more and more people capitulate. Like myself, I also sold a good chunk of my altcoin bags, but not because I capitulate, not because I think nothing big could happen from here. It's just managing risk, right? I don't want to, I have two probabilities in my head, and if one is not playing, I don't want to pay back like all of my gains. And so I obviously manage my risk, because altcoins are the trap. Altcoins are very, very, very tough. BOS is reacting finally from this demand, and usually once we go for those levels, as I said before, it's like a switch, so the whole market changes. And we were in higher time frame buy program for like almost 3 years, and now we came back to this level. We are at higher time frame premium for BTC. We're breaking structure to the downside, and this is moving higher, so maybe program has changed to sell program here. Total also taking this low. We haven't really closed below with this move, but now we have full bodies below. Bearish sign, in my view. Also here, total more and more closes below this low. Obviously, we still have this to take, but at the same time, local structure is already breaking. Same here. And as said, bounce could be on the table. Every bounce will be an opportunity for me to short. And also interesting, I have it here already. The Dixie is making an internal high weekly close, internally at least. So let's see what this chart will bring over the next days, weeks. I mean, but obviously we could go for those levels now. If we should enter a bear market, it makes sense that the dollar gains some strength, and that it maybe continues the downtrend, which it started by breaking those lows here. Okay, I think this covers it up quite well. This is basically the whole recap I wanted to talk about. Manage your risk properly. Don't be scared. So there's no reason to be scared. You should just manage your risk, right? And for many people, like if you manage your risk before this sell-off, or like altcoins not going to your best case target, shouldn't like completely wreck you, but it still feels kind of shitty. Thinking about like you had an expectation, you thought like, oh yeah, if this coin goes to this price, I made a lot of money or whatever. And now maybe accepting that this doesn't happen is probably the biggest challenge for many people that manage risk. But you still should like just accept the reality and manage your risk properly, because if you don't, you really get wrecked. And this is like, imagine, like, I'm not saying this is 100% it, but imagine prices go down from here. We have like, this is the start of the bear market, and you just don't accept reality. You hold on to those ideas because you like don't want to shatter your expectations or whatever. This is how people get completely wrecked. So if you have managed your risk so far, if your bags are all right, if you just don't make as much money as you thought you would, you're totally fine. Now let go of this bias, let market structure tell you what's going on. And as said, I'm not saying we go certainly down from here, but the signs are there. And people get only completely wrecked because they don't accept the reality and hold or buy into the bear market, and more and more and more. And as we saw the whole cycle, this cycle is different. And imagine like altcoins are going to like nuke what they always did, like 70, 80, 90% drop. This would be very, very painful this time for a lot of holders. And so don't be one of them. Let your bias go and trade the chart. And as said, if there is a pump, if there is a relief pump, or if there is even another leg higher, we can still try to catch some longs. We can still add back once there are signs of strength. But as said, with BTC closing below this low, doesn't look too good in my view. SPX also, and so managing risk is key. Okay, I think that's it from my side. You can now ask questions if you like. Welcome Branji and Med, by the way. We can also make you talk I tried this with the white belt course. So if you want to talk and ask questions like this, or if you have to show something or whatever, we can also try it. That you guys share your screen or whatever. Ah, yeah, and I remember Paul asked me something about execution tactics. Mm-hmm. Oh, no problem. Recording is up and running. So I cover basically crypto, stocks, all the things I do in the market. But in the end, most important in my views right now is crypto, because if BTC is really losing the slow, the more closest we get below the slow, the more certain I am that we probably go below 100K very quick. But I also at the same time, I could see a bounce from here, making people capitulate somewhere here, see a bounce, everybody thinks it was a mistake to sell, buying back in, and I'm definitely gonna short should we fill those gaps here. Yeah, and Paul was asking about low time from execution. I sold the rest of my crypto today too. I only had about 20 to 25% left. Yeah, same here. So my overall size wasn't as big anymore. And it's important to manage risk here. As said, if there is a bounce, it will feel like a mistake. It feel like, oh no. But in the end, this is liquidity, right? They make people sell, then they pump again, and then they make people think it was a mistake. Then they make people buy back in again, and then it drops again. So it's, yeah, just follow the plan, just follow the structure, and everything is fine. I can use this. Paul asked about the low time from execution tactics, and this is actually a pretty prime example and a pretty simple one. We had this strong move into all-time high, and it felt like, oh yeah, we're breaking out, we're going to 150K. At least this was what you heard and what you have seen during this time. And then at redrive, obviously making a higher high after higher high after higher high, which gives the people the impression we make higher highs and we go up, the trend is intact, but in reality this is a distribution pattern, as we know. And so I entered my first short up here, and it was basically looking like this. A little bit wider. This was a swing idea. I played one like this, and another one, a tight one like this, which I TP'd down here. And then like 35% or something, moved my stop loss to break even. And then this happened, and then the 1 hour did not provide what I expected. We ran it higher, so I got stopped on the small one. I got stopped at break even, and because I've seen this, and within this whole move, shorts were opening. So we had massive shorts opening, and then I thought like, okay, good. If there's shorts opening, we have liquidity above this high, right? And why, if my stop loss is also there, I don't want to be stopped out with them like this. I wouldn't. And the funny thing is, I cut this position around break even, and my stop loss wouldn't been hit, would have not been hit. But at the same time, another big spike could have been on the table because of those shorts, and this could have easily been all the way up till 127. And this, I didn't want to get stopped on this one here and then only think like, oh, should I re-enter or not? So I cut it around break even, and then it went up here and we rejected from this high again. And then I thought like, okay, good. I want to add back, but first I want to see this major trend line here break, and it broke. And so I started adding to this position actually. And I increased size with this little pump. I was at 1% or something. Then we nuked, and then we came back to retest this supply area here. And there is no reason to refine this in my view, because the idea was still a swing trade idea. And what I've seen a lot of people doing, especially also in the white belt course, somebody showed me that they were entering the 4 hour here with very close invalidation. It obviously got stopped out, and then they were not in this big beautiful short here because they were over refining this area. And as I said in the beginning of the stream, I see selling BTC up here is like buying it for 20k. It's like most optimal and higher time frame premium. I want to sell as much as I can, and I can't sell more than I have, so I short, obviously. And this whole swing trade idea is not based on this 4 hour block. I could use it to refine to get an entry or something. And once I saw this big reaction wick, I added up to 2%, and then it obviously played out quite nice so far. And I TP'd down here at the range low just because I thought big absorption at the lows. We could easily come back up, and I can use those 20% to, for example, scale into this position. And so this position is more or less already for free. This is safe and profitable. And should we go down, I'm prepared. Should we go up, I can add back. And so I try to prepare for everything, as you see. And this is basically a prime example for lower time frame execution. That the only thing is, don't get nervous based on whatever here. So follow your plan. And many people can't really handle the lower time frame stress, and they try to over refine, and then as said, going for the 4 hour level here, which is also not really in premium of the swing. And so it went up here to the supply block, and then it went down. And so have if you want to trade a higher time frame idea and refine it on lower time frame, like I usually always do, be aware and don't mix up your plans, don't mix up your ideas. It's a higher time frame plan, so don't get nervous on every lower time frame change of character or change of structure. Because if I, for example, drop down to the 5 minute and you stare at this all day long, you will see that, oh no, downtrend, oh no, we broke structured upset, oh no, we make a high here, and stuff like that. And people get very nervous about that. And while this is very beautiful as execution tactic, and it can lead to like very high R. So for example, also the small scalp short, if this would have played out like I thought it would, this would have been like a 20 R to the range low, and I can fully TP it down here. It didn't, but it was worth a shot. I took some TP at the local structure. I got stopped at break even on this one, and then I just added the big one back. And basically this little TP already paid for this minor stop I paid for the higher time frame idea. And you see, it sounds complicated, and you need to find something that is natural to you. I came up with this whole thing myself because it feels natural to me to do it like that. If it doesn't feel natural, it's hard to execute. And so it might be wise to figure out something that suits you better, or your time schedule or whatever. But for me, this works kind of well. And you will see me do this every time. I don't just always have time to fully update my execution, and sometimes I'm also on the road or something, and I just execute on higher time frame and leave my stop loss and everything like it is. But if I got the time, I usually try to refine my entries. But I still don't lose sight of the higher time frame picture, which is in this case having the swing short from up here. Can you quickly show how you find a stock level that interests you? I find stock charts often quite messy and hard to draw clear levels. But if I have understood correctly that you mostly focus on demand-based areas and go for rather wide stop loss, smaller RR in exchange for a more comfortable hold, they probably have shown it already, but I haven't seen all the streams, in which case just point me to the correct one, please. I talked about this before, and in the end, it's pretty simple, and I can explain it easily again because it takes me 5 minutes. So let's take this one for example. The key is first of all, I find those stocks by looking at TradFi guys, at news or whatever, like narratives, and I always think about this stuff because I find it interesting. So for example, what will the future bring? So, and what technology or product or whatever will be very important in the future. And this is, for example, why I came up with the whole nuclear stuff, because I think energy is probably one of the most important resources we have, because without it, nothing will really work. And then I look for nuclear stocks. And then I found, for example, the Loy one or this one, Mind Medicine. I'm very interested in psychedelics as medicine because I made very good experiences myself with that. And this is a company which is experimenting and even doing studies on humans by now with psychedelics to treat, for example, trauma or stuff like that. And the company obviously got pretty hammered. And the thing is, I look for a great narrative, not because I want to buy this narrative in terms of, oh yeah, this will go up for sure. No, but a narrative because I need something to like categorize my ideas. And if the narrative has potential, I think this will be a great thing in the future. I look at companies and use just ChatGPT, for example, to find me the biggest companies that work in this sector. And then I check the chart, and then I look for very simple things. So first of all, I want to see something like that. For example, I want to see it at higher time frame discount, which is obviously true here. Another thing I look for is volume. So volume shouldn't be below 300 million, even though sometimes if like the company and the chart looks good, I still enter. But then obviously it's all about sizing. Like I said in this poker post, I treat it as a good hand or a bad hand. I can also play a bad hand, but obviously I won't go full size or all in on a bad hand. But obviously I can still try to win with this hand. And so this all goes into sizing then. And then very simple also, I don't want to buy a stock which is like at this point, even though it's a very like ever since here it did a very great job, but it also took it like 1,000 days, so basically almost 3 years, and over a year nothing really happened. And while it's consolidating down there, I don't want to lock in my money into this stock and just watch it go sideways forever. But in this case is actually a very bad example. But because I could have entered here and it would still like it would have still done great. But I usually look for a trendline break, which just shows me I don't trade the trendline break, but without the trendline break, it's still going down, right? And why would I want something that is going down or going sideways? And with the trendline break, probabilities of this doing well after increase. And so let's imagine I bought down here, then my next logical target is somewhere in the supply. Obviously, volume was very low on this one here, as far as I can tell, so I would have not bought it probably. And we went to the supply, and my entry here, for example, was just simply based on this little trend line, because I just connected those two highs, and I said, okay, we are like approaching this trend line. Can we break out of this trend line? And you see, I don't trade the trend line itself because it's really messy. It breaks above, it breaks below, it breaks above, it breaks below. The trend line itself is not very very nice to trade, but at the same time, it just showed me, okay, structure is changing here, and then we grind around here a little bit, and we hold the trend line more or less on higher time frame, and then we went higher into the next supply, and I watched the chart here very closely if I want to TP or not, and it just showed me that it's strong, it's eating the supply, and now the question is, can we continue the strength? And another good example for which I showed before already is Nail, because it's hydrogen, it's a nice narrative and everything and blah, but ever since like this trend line, you see we just touched it from below and then we just went lower. The first time we broke it was actually here, and we still went sideways since then, so I just went in with lower size. We are at higher time frame demand, and here you see I just connected those two highs and we broke out of those. This is similar like the mind medicine thingy, and I just added size within this little consolidation, and maybe it's doing exactly the same thing. And this is something you will gain with experience, and you will learn with experience. It's so many charts keep on repeating the same patterns. Like, look at the whole thing. I mean, even though it looks different, you will find 1,000 charts who look exactly like this. Big parabola, big sell-off, consolidation at the lows, break of trend, and then suddenly it pumps into some kind of supply. And as said, the most aggressive ones look always exactly like this. Big pump, breakdown, consolidation. No reason to enter as long as the trend is still pointing down, even though this one is pretty tough to read. I would probably go for those. And obviously, then it also did not very well ever since, but it also was wise to wait for the supply, for this demand. And then again, we entered demand, and it's still, let's imagine you entered here, you were still down 70%. So this is really no easy peasy stock. But at the same time, if you manage your risk properly, you will see that this one broke here, and you could have just entered here. And this is exactly what I did basically. I entered a little bit within here because I said, okay, good, this is like still going down. But then we broke the trend line, and you see this one breaks it very fast, for example, so you don't have a lot of time. And I added here more size, and I already TP'd still within the higher time from demand here, here, and here. Just even though it's still a discount, but I just know how this moves. It pumps and it dumps. It's basically like a shitcoin, but a little more predictable in my view. It's not as manipulated. And then there's another different structure of chart. This is your up only chart, and you think like, okay, I want to have exposure to this one, but how should I do this? And usually if a stock corrects like 30% or 25 to 30%, it's usually a good time to buy. Not that I say you should buy here and then you hope for a moonshot and you just buy on full size. Again, sizing, it's not the best hand to play. But after such a correction, and you see here the absorption at the lows, it's interesting to maybe gain some exposure with invalidation below those low. We entered this demand here, and you see this little gap, and I entered size on a low time frame trade. You will find this in the Oklo thread, and I TP'd in the supply here, I TP'd the rest here, and my spot bag, which I acquired for 114, is still up and running. I TP'd recently 25% at the highs here, and now it went down again. So maybe same opportunity, 20% correction at the trend line. Maybe someone could go in with local invalidation, but obviously the higher we go, the worse the hand is that you can play. And especially with the SPX break-off structure, like I showed here, all of those became way worse, like from a sizing perspective. You should size less, smaller and smaller the higher we go, because the less sustainable the move is. And so the whole system is basically looking at narratives, picking some of the companies which look the most promising, looking at the chart, is it in higher time frame discount or is it in higher time frame premium? If it's in discount, the hand I can place better. If it's in demand, even better. If the trend line is breaking, I'm looking for an entry, and then I make it profitable very quick, usually at the first area of resistance, just because they most of the time they move so aggressive, and you can be almost completely sure that supply and demand will at least react. And so yeah, like removing some chips off the table at those is always wise. Another good example is QBT. You see how often I entered, I added back, and how often I TP'd within this range. And now we came back here. This could easily be distribution, right? We are in higher time frame premium. But at the same time, I tried to take a long here with this breakout back into the demand. And this one is interesting because it's reacting to the hidden levels quite well. You see here we have the 1 hour hidden, we have a 12-hour hidden, but not all stocks react to the 12-hour, to the hidden stuff as well. Where's my level? Where is it? It was this one, yeah. Yeah, now it looks just not really as if it worked. You see 12-hour hidden within the 1 hour hidden, and this is where I entered basically. And it pumped 17% from here. So it's very aggressive, and as I said, this one is reacting kind of nice to the hidden stuff, to the breaker block stuff. You see here perfect reaction also from the 1 hour. And so I entered here, but I already TP'd 35% here because double top, absorption wick at the highs, and the rest got stopped at break even here. And now it seems like it wants to make lower lows from here, and this could easily be distribution, it could easily be over. And as said, the more often the level reacts, the less size I give it, because it gets less optimal. But at the same time, I wouldn't be surprised to see another bounce into this, and the bounce would obviously be quite aggressive on this one. And my stop is soft below those those lows, just because I think should we lose those lows, we will probably go at least here or here, and I don't want to pay back as much. And so you see, it's always a bit similar, but it's always a bit different, and you need to read the asset you trade. You need to read the stock and how it's behaving. As I said, here the breaker block stuff works kind of well, and on other stocks it doesn't work at all. And so best is to like collect some data yourself, collect some experience, and understand the asset you trade. And you see we have, as said, we have those that are still in the parabola, and they will probably in the end, after the hype is like cooling down, they will look probably most likely something like that. So this is probably what we are in, and this could extend for a very long time, and the performance is obviously kind of nuts. And then usually we have this big aggressive sell-off, and as said, you will find many charts that look exactly like this. And after a year or 2 or 3 of consolidation, NIO is another great example. Big pump, big sell-off, came back to this demand here. And then ever since we broke this trend line, I added size, and ever since here, it did very well. And you see, I never expect like my best case target. I always make it profitable locally, trail my stop loss, because I know the risk of those. And they're basically, this is why I call it alt stock season. They are very high risk, high volatile. But I call it alt stock season for a reason, because it's really moving like people expect crypto to move, more or less. And so you should treat it as what it is, and which is very risky. But yeah, this is pretty much the whole strategy, and you just need to understand where you're in, because on many of those we are here. But obviously on such a pullback, if you like you see the 30% pullback, which I talked about, you will see those many times, and then we still had a 400% pump. And so like getting the foot in the door, playing the little less strong hand can also work on a little less size, obviously, and your size can be way bigger if you see something like that. And so yeah, so we have three stages usually for those. We are either here, we are either on the way down, or we are either here. And this is your best hand. You should stay away buying this one spot within this area, obviously. And you can like play on lower size within here, trying to get the foot into the door, like I showed many times before. And as said, they trade way cleaner. I mean, you also need to consider this year was incredible for stocks. You won't see this every single year, but as said, as long as it lasts, I use it. And this brings me to the core of the whole strategy. So this was the whole chart thing, the whole narrative thing. But the most important one is that you have a good higher time frame read, a good macro thesis, and understand where we are in the cycle and what to play for this stage of the cycle. Because obviously into the bear market, I won't play those as aggressive. I try to catch some major shorts, and then at the bear market lows, I don't buy a lot of those. Some size goes into those, but most size will go into majors, the ones that are already established, that are probably doing 100% or something, almost guaranteed into the next bull run. You're welcome. Oh no, problems with Discord. Yeah, Discord does weird things at times. Yeah, I think Roaring 20s are still in play, more or less. And my fractal was invalidated. The one I showed you, the arrow one, I don't know. I think you... because my arrow was telling me like the fractal I took from the 1920s was basically doing a little sideways here and then rolling over, and we obviously just went higher. But I mean, so far the whole chart is just one big parabola, and the question is how many more cycles do we have left? But I still think the whole century, or the whole decade, I mean, is pretty much very simple, very similar to what we saw in the 1920s, from a technological perspective, from a society perspective, and so also from a market perspective, because the market is nothing else but human behavior, human psychology made visible, more or less. And so, as said, I think we top somewhere here soon. We will probably then have a bear market, in my view, which is not as aggressive as people think, to be honest. Probably going for those levels here. But I'm willing to get proven wrong. And then we have one more push, probably a very, very aggressive one, very steep one, but it's probably built on so much fear, like so much skepsis, and the world is going down and this and that, and while that the market is just ripping more or less since like this whole bull run. And I think it's going to be even more aggressive, and the news are going to be even worse, and it will feel like the biggest mistake ever to buy big. Timing these things is so hard, yeah, but at the same time, so if the SPX corrects like 15 to 20%, you just buy. And you have an invalidation. So because if this is not holding, we are very likely go to this or to this level, which I don't really think is very likely, but obviously you don't want to buy and hold here for another like 30% drop. But I think the most important areas to look at are this, and if these two are not holding, if these two are not holding, yeah, it's pretty much, we will probably go for this area. And I mean, like black swan worst case would be like 1930s fractal will probably bring us back to this demand. But as said, level by level, entering here makes perfect sense. Everything like a 15 to 20% correction should be bought, in my opinion. And if this is not holding, we can still decide to sell for whatever. If you bought here for 10% loss, buying back here, trying to get the foot in the door. And I think the more down we go, the more optimal the hand gets. So you play on bigger size. And you have so much time. So as said, just look at the make high time frame plans by looking at history, looking at the chart, like all those things. People spend way too much time looking at 4-hour breaker blocks instead of like building a good higher time frame thesis. And usually, as said, if the SPX corrects like more than 15%, it was always a good time to buy. And like those big corrections like this, they are very rare, to be honest. And should they happen, if you buy at a 20% correction, you're almost halfway in, right? And if you just buy on low size, for example, very simple again, it doesn't need to be hard. It's only as hard as people make it. Because if you, for example, just wait for this break of structures, look how clean this is. It's like people overcomplicate so many things. So you buy because, so as said, you scale in because it's a 50% correction. You buy more because it's 20-25%. So you bought maybe 30% of the size you want to have here, and then it breaks the downsloping trend, and then you buy back here, and then you average just somewhere in this area for like around 4K. And then you have like almost 3 years of peace for a 70% return. And if there is like a very big chunk of your money in this, 70% is a lot. And if this is not enough, look at BTC, same story. If you want to have better returns, you obviously need to go down the risk curve a little bit, but it doesn't need to be as complicated and as nuts as buying altcoins and all this stuff. Look at this. You're scared of buying as much BTC as you can for below 20K. Okay, you wait for this breakout. You see you have another like 4 weeks or something to buy for below 20K because you see trend is breaking, and obviously 3 years of 700% performance. And I can't stress this enough. People are so zoomed in. People are so focused on trading every shit block they find, that they're not having a real high time frame thesis, and they don't spend time with that. But this could be the easy money place. Like, obviously, those opportunities don't come around every year. But if they are, you want to be prepared. You want to have size. to really enjoy those gains, and then you hedge along the way, you add, you trade, all that adds just to the core of your portfolio. And this is what all big traders say, right? I mean, obviously there are scalpers who only scalp, but they do this like full time. They spend like more than 40 weeks an hour, 40 hours a week with scalping and everything. And this is not what most people want to have. Most people want to have just want to make money to live their life, and like making plans for stuff like that is really it, more or less. It could be very simple, but people want to have it complicated. Like, what did Jonas say last time? A compensation with complexity. If it doesn't sound complex, people don't want to hear it. They want to have the smart, the complex solution, but it can be very simple, to be honest. And there is also, this is a good example. There's also there was the first instant bakery, like muffin or cake thing, like product you could buy. It was released in the 1950s, and women did not want to buy them because they thought it's like cheating. It's too easy. You just need to add water to the whole like bake mixture, and that's it. Then you put it into the oven, and the women back then said, no, we don't want to buy this because it's too easy. It feels like cheating. It's not right. And then they changed the recipe to just add an egg, and suddenly it sold like crazy. Because it's a little more complex. You have one step more, not just water. You're really doing something for it. You really do more. So it's fair. It's not cheating, you know. And this is the same thing with trading. People think it must be complicated. It must sound smart. It must be really tough. You need to do more to earn more. But in reality, you need cash flow. You need to buy. You need to have a higher time frame thesis and buy at the right time and sell at the right time. And this doesn't take a lot of money with the right knowledge. And most people have the right knowledge already, because if you understand trading on a like very artificial level, you definitely understand the higher time frame stuff. Then it's just about emotional control and having a real plan and spending time with that. And as I said, people don't do that. People think they must like zoom way in to make lots of money. And the reality is that most scalpers and most traders, if you're good, you make 10% a month. And for the amount of time you spend, it's oftentimes not even worth it. So yeah, this is just my 2 cents to it. But I think a lot of people will profit from adopting those things. Hello, Tinox, by the way. Managing greed in a downtrend has brought me undone in the past. Always looking for lower, then miss the move. Yeah, and I mean, obviously you don't want to buy too big before the downtrend is over. But again, like the simple stuff works in this case. You don't want to buy into the sell-off. You maybe buy a little, and then I mean it's a little late, right? So it already bounced like 11%. But still, buying in here would have still made you a 25%. This is more than the average shitcoin holder made. The average shitcoin holder made probably minus 25% in the same time, while having way more stress. And as I said, this could be the easy money, and you can apply this basically to every chart, the trend line stuff. If you're scared to buy the sell-off, this was the time to say, okay, I flip my bias here. And you could still buy BTC, and you could still ride a 50% move into the highs. It could be very simple, to be honest. And then obviously you need to sell. You need to have your emotions in check and all that. But just from a technical perspective, it's way easier than many people think. And the thing is, you can buy here then, and then you have invalidation here. It's a 15% stop loss. It doesn't look sexy, doesn't look appealing. But for most people, this is probably easier to trade and way better to handle than anything else. And in the end, it turns out to be a 3-hour trade, and that's fine, right? It doesn't need to be a 10-hour trade. A repetition of 10 3-hour trades are better than 5 lost 10-hour trades, right? So I opt always for a higher win rate, because this is what people can execute. If you play a high R setup or a high R strategy, most people struggle emotionally or from a time perspective, because those need a lot more time and energy. So yeah, as I said, doesn't need to be hard in my view. I do think I often overthink stuff and make it way more complicated than it is overall. Thank you for reminding me to keep it simple, Max. Yeah, and this is why I say like compensation through complexity, especially in trading or in the market. Many people are analytical. Many people are what I would consider like rational and smart, or at least on a like rational level. They are smart, and so they like to analyze and to think into stuff and all that. And obviously this makes sense, but you also need to consider that if this is the type of person who gets drawn into the market mainly, like I don't talk about the shitcoin gambler who's just caring about the picture of his coin, or the animal. I'm talking about the people who want to learn to trade, who want to learn to invest. Those are analytical people, and so the whole market is basically designed to trick those people. And so think about how you think, and then think about how whales or institutions or market makers could exploit that, and then don't do it anymore. And it's oftentimes the counterintuitive, the thing that is not so logical, especially in crypto, the thing that is the least rational is most likely going to happen. Because as said, it's made to trick people who think that way. To be fair, I didn't have the skill then that I have now. Yeah, and I mean, obviously, I'm simplifying everything here. Obviously, the whole thing in the moment is way harder to execute and all that, but that's why making plans and spending time with the higher time frame stuff and like really having a plan is so important. And people don't have that. And when it's time, then they have spent a lot of time like finding 4 hour breaker blocks, but they don't really understand, still don't really understand when it's time to go big and to have, when you have a great hand, to really size up your trades at the most optimal areas. Because as said, those positions are then the easy money plays. And people come from more or less with an investment mindset, mostly from crypto, because they think like, oh yeah, I buy this life-changing tech and I just wait a few years and then I'm rich, and they get completely wrecked. But the thing is, they are really like there is a market for that, and it's called the stock market, because there are actually real companies that provide real products sometimes. I'm not saying that every company that has a nice narrative is going to be profitable or providing something in the future, but they are more likely to do that than the average shitcoin. And so investing works in the stock market, especially like in majors. Obviously, they're going up only forever, basically, with maybe a decade in between of ranging. You don't want to hold there, but obviously it has a lot more like fundamental reasons, and you see that in the chart because people are bidding this up for their retirements, for fundamental reasons and all that. So it's obviously moving way different than altcoins did, because if you bought in 2022 and if you didn't sell the top, you were up 73%, and then you're only up 40%, but you're still up 40%. The average altcoin that you bought in 2022 that is here around break even, then here it was minus 50%, and now it was up for a very short period, only for being negative again. And it's a whole different market. The whole altcoin market is the biggest trap ever, and people get wrecked in there, and so they neglect the whole investment thing, the whole like easy money thing. And this is also part of the trap, because then people think, oh yeah, you can't make money in the market, but obviously you can. It's just different strategies for different markets, for different environments. And while like trading is the thing to go in crypto, especially with altcoins, investing works as well. And this could be a very big chunk of the portfolio and making significant returns each year. And you add to those with trading. Okay, guys. Any more questions? Because other than that, I'm gonna wrap the stream up. Yeah, you're welcome. Was nice talking to you or reading your messages. You have one more, please? Hello, Daniel. With something like supply and demand, do you think that a buy low and hold mentality is better than the S&P? Yeah, now I get it. And is it buy low and hold mentality is better to have than pay 30% tax on all profits when I sell? It depends on the context. For example, if you buy in 2022, like those lows, after a year of bear market, almost, you wanna have a longer time frame mindset. If the sell-off is as aggressive like here or in COVID, you might rather wanna have like a little shorter term horizon. But in the end, you also need to zoom out a little more. And if you look at this, it gets steeper and steeper and steeper. And while I think we have another like cycle left, like I said, it's probably looking like this. And at some point, this will come tumbling down like quite aggressive. And then a 50-60% bear market is definitely on the table. And all through it here, it doesn't really matter when you bought, you will be underwater or something. And so context matters. And the steeper we get, the more profits you should consider taking and the earlier profits you should consider taking. Because 30% taxes on your profits is still less than paying back like all of your gains. And then you can still like, even though they cut like 30% of your profits, you can still add those profits back in after the correction. So for example, if you bought here, you sell for a 40% gain. Obviously, you still need to pay your 30% taxes, but you made a profit. And then the correction comes, and then you can add back those profits. And this kind of compounding, this will definitely outweigh your taxes. But it all depends on context, as said. So as said, the steeper we go, the more profits you should consider taking, and the longer and the deeper the bear market is, the longer and the more comfortable you can probably hold those positions, like just from a historical perspective. Also, obviously, after this long bear market, you did 100% return over a few years, and then we went back to the lows again. And so asset context matters, but like it's the same as in crypto. You can like remove your tax obligation by holding longer than a year, but would you do that now? Like, is it a good idea now? But obviously, if you buy Bitcoin in 2022, you will definitely exceed this. So context is key here. But yeah, especially like SPX stuff and everything, it's you can apply a buy and hold mentality a lot more than in crypto, obviously. The last leg up on the SPX is ridiculously vertical. It definitely is. So it's not very sustainable. This is why I built the short here. Even though I think we could sweep the high again, it could also come tumbling down very quick from here because this is very unsustainable. I mean, it's even steeper than in 21. So I find timing the stock market hard. What you said is true. Definitely wouldn't buy and hold crypto forever. Yeah, we need to take many things into account, and we will see. So should we enter a bear market into 2026? It will again feel like the worst time ever to buy because the real world noise around stocks is then usually very high. Because if the stock market is crashing, usually the world is going down. We have a new war. We have like tariffs, even though I don't think this is like really a bad thing, but in this case it was tariffs. And so it will always feel like the worst possible time, but scaling in, buying in, and the lower we go, the more we buy is usually a very good approach. And this is also because people come from crypto, and if you see this downturn, you think like, okay, good, this can't be it. So it's still a higher low. This can't be it. Like crypto from here, crypto does this. And then it does this again, back to the highs, and then it does this again. And people are so scarred of those movements and of those like paying everything back and more and and all that they think, oh yeah, this 25% move can't be it. But this is the stock market, right? A 25% correction is a big correction. It's a bear market. You would consider it, like, if it's fast like this, you would consider it a crash. A 25% correction in crypto is like, oh, we're just getting started. And so you need to, by spending time and looking at historical patterns, as said, a 50% correction or more on the stock market is very rare. Usually we have like 15 to 20 to maybe 30%, and then it's a good opportunity to buy. But obviously for the typical crypto guy, it doesn't feel like a correction. But in the stock market, it is. Okay, guys, I have to prepare something. I got a mentee soon. Thank you for tuning in. I wish you all a great weekend, and we talk next week. Yeah, have a great weekend. Bye-bye.